record watch for the Dow this morning. The futures gain of 51 points that's indicated right now would point to a new high. You're talking about the Dow futures indicated up by about 111 points. S&P futures up by 14. And joining us right now to talk more about this is Mark Grant. He is Chief Global Market Strategist at B.Riley FBR. Mark, we said you were going to tell us where to find value, but in a recent report, hello, good morning. In a recent report, you said that this is an investor's hell and a borrower's paradise. Explain what you mean.
Yeah, I have two things to say, Becky, that I've heard almost nowhere to share with you with Squawk Box this morning. Yes. One, it is a borrower's paradise. We're at record low interest rates. You know, anybody that's borrowing money, corporations, individuals, are in one of the sweetest spots in decades. For investors, fixed income investors, they're in an investment hell because they can't get any yield. And whether you're a senior or a university endowment, whether you're a pension fund, you're facing massive problems. As a matter of fact, Becky, and here's one point I want to make. One of the reasons that the stock market is doing as well as it is because money is flowing out of the bond markets because people can't get any absolute yield, and it's going into the equity market. The second thing I'd like to share with you is that there's all this tout about buying some equities with 5 or 6% yields, buying ETFs where, of course, the manager gets more money, the more money flows into his funds. The kind of almost secret place right now, they're closed-end funds, you can get double-digit yields, you can get monthly checks, and I think that's by far the best sector in the market for anybody that needs cash flow and some kind of investing. They're complicated. You need somebody really to help you. They're very complicated. But as far as I'm concerned, that is the best place to put money to get cash flows and yields right now.
Mark, that's something you've been saying, I want to say for more than a year, maybe 2 years going back?
Right. And it continues to be true. And Becky, with interest rates falling even further, we're at 175 or so on the 10-year, you know, I'm coming up to New York, as a matter of fact, in mid-December to talk with the Cornell University Investment Committee, because all kinds of institutions, as well as seniors and retirees, are having to readjust their portfolios and what they're doing so they get some kind of cash flow and yield. I think it's very problematical. And as I said, I think this is also one of the major reasons that the stock market is performing relatively well right now.
You have said that you think that there's a catastrophe waiting in the wings. What does that catastrophe look like?
Well, I think the catastrophe is going to be that people, especially retirees and seniors and pension funds, can't find any yield, so that forces them to speculate. In other words, it forces them to make riskier bets. And I think eventually this is going to turn out badly, especially if we see at some point some kind of downturn in the equity market. People are going to take it on the nose. And so I, as you know, talk to a lot of very large financial institutions, and this has been the main part of the conversation. What are we going to do here to deal with not being able to get any yield?